Hi, welcome to the Market Alert for Monday the 11th of July 2016. So the market's going higher, and I will explain why that is so in just a moment. But first of all, you can see there were two trades on Friday, and both were just 20-point scalps because the market didn't actually drive through with a big bar at the time of going through the scalp or any resistance level. And then in the second trade you see the same thing there, the market just going through and then coming back, not much activity, and then sideways before the market continued higher for the remainder of the session. So simple two trades there. And the daily charts, if you have a look here, you can see the market going up, a low volume again. Notice the range of this bar is greater than Thursday's price bar. The volume is less. This is a central bank driven market moving to the upside. Prices are being marked up. There is no new buying in this market. In fact, prices are going to go straight through the all-time high, and the reason for this is what I'm going to show you in just a moment. But before that, let's just have a quick look at the news before we move on. Today we've only got FOMC member George Speaks. He's being wheeled out to have a chat at 3 p.m. So let me show you why I think the market's going back to the all-time highs, and that's because over the weekend the chief economist of Deutsche Bank has spoken, and he's asking for 150 billion bailout of the European banks, and in particular the Italian banks, requiring 40 billion alone just to keep them afloat. In January, I think there was a new directive that said that banks or failing banks could only take depositors' money in order to keep going, but it looks like there is a bit of a sea change coming with this, which is ironic really, given that the Cyprian banks raided the depositors' accounts 2 years ago, actually 3 years ago now this summer, taking their money, replacing it with worthless bonds, just to shore up the banks. But now this is happening on mainland Europe. It seems like different rules are going to be applied. So whichever way, it's going to be bad, but it's going to be good for the stock market. So you can expect to see the market moving straight up, straight through the all-time highs, because it's a bonanza for the banksters. And speaking of which, if you have a look at the implied volatility, 10.58, we're heading back to that July of last year low of 10.45. This will go a lot lower if the go-ahead is for the 150 billion bailout comes along this week. There's no way they're going to allow Project European Superstate to fall apart just yet. So they will fund the banks. There's no doubts about that. There'll be pressure from the US in order to do so as well, no doubts. So the status quo continues. The banksters are allowed to issue bad loans, and then they are bailed out again with taxpayers' money, but not only this generation, but generations to come as well. So that's how things are opening up this Monday morning. Let's see how the day unfolds in the next few days, but certainly move to the upside unless something else comes out of nowhere of a geopolitical nature. Other than that, it's normal service back to moving to the upside. Right, that's it for today. I will see you in tomorrow's edition of the Market Alert. If there's anything to report, I will let you know. Other than that, have a great day, and thanks for watching. See you in the next one.